Good day. It's a pleasure to be able to join you for Convention A 2022, and really an absolute honor to be invited to share a few thoughts on the theme Fighting Climate Change, Actions Required Today. My name is Ekhosuehi Iyahen, and I am the Secretary General of the Insurance Development Forum. And for those of you who might be less familiar with the Insurance Development Forum, or the IDF as we often refer to it as, we are a public-private partnership which is led by the insurance industry and co-chaired with the United Nations and the World Bank Group. We have as our objective and ambition to help to drive the use of insurance and related risk management capabilities to support the resilience of communities, businesses, individuals, and governments when we consider the impacts of natural disasters. And so our efforts are really focused on how can the insurance industry, working with the public sector, really help to achieve the sustainable development goals, and obviously addressing climate change is a big part of that. So stepping back now to the focus of the theme that I was asked to elaborate on, I will start my intervention really by perhaps focusing on why is this topic of addressing climate change so urgent at this point in time, and why is it, or the important role that insurers can play in helping to drive the need for adaptation and resilience building. So that will be my focus rather than a focus on mitigation. Following this, I will then close by offering a little bit of a deeper delve into elaborating on some key recommendations that speak to the ways in which the insurance industry, working with the public sector, can actually drive real impact when we think about the need for climate adaptation and really supporting resilience of individuals, communities, businesses, and governments around the world. So starting off in terms of the overall context to this, I think that all of you who are in the room, or at least I hope most of you, really are aligned when we acknowledge the fact that climate change jeopardizes socioeconomic stability and really has been at the heart of setting back a lot of the development efforts and achievements that the world has been able to achieve over the last few decades. The increasing frequency and severity of climate change driven disasters threatens lives and livelihoods. It threatens food security, water supply, property security, and economic prosperity around the globe. Many of you have witnessed the news over the last few weeks, months, and even years. We've seen the floods in Pakistan, heat waves across Europe, fires in North America, floods and tropical cyclones in Asia and in Caribbean islands and in the South Pacific. And so there is an urgency when we think about the impact of climate change. And in this urgency, there's also a need to really focus on the topic of adaptation, because adaptation is a vital to make society resilient to the impacts of climate change as we're seeing it manifested today, but also into the future when we consider the fact that a lot of the targets that have been set as it relates to mitigation have not been achieved. So what does adaptation mean? Adaptation means increasing our ability to recover from specific disasters. It means reducing vulnerability and promoting resilience, both physical resilience and also financial resilience to catastrophes. Insurance can obviously be a big part, or be a key tool in both these aspects of adapting to climate change. First of all, it provides the flow of capital to support communities and to help the recovery process in terms of infrastructure after a disaster occurs. Without adequate insurance, the burden of paying for these losses fall largely on individual citizens and governments who are already facing constrained budgets when you think about the impacts of COVID-19 and the resourcing that had to be mobilized to deal with that event in and of itself, and the impacts of which many governments are still contending with. The reality also is that countries with higher insurance cover recover faster from disasters, and increasingly governments are recognizing the role and benefits of insurance in transferring risk from disasters. Yet there is also the reality that a large and even widening protection gap of underinsurance exists, and this is both within the developed world as well as in developing countries. And in many developing countries, we are also talking about contexts where we have 3 to 4% in terms of insurance penetration rates. So what that means is that when an event occurs, the resources that actually could be invested in development are often pulled back and invested in response activities. And this obviously has a broader socioeconomic development implication for that country country, for that for communities and for individuals. But there's also another way in which insurance can help to spur resilience. For example, insurance expertise in risk evaluation helps to make the economic, can be used to help to make the case for investments, for example, in flood defenses, or for changes to how and where buildings are constructed. Using insurance and related risk management capabilities and tools and kind of thinking is also a way of moving from crisis reaction mode towards risk management. And this is all geared towards thinking about how do we strengthen socioeconomic resilience under a changing climate, and being aware of risks, and also thinking through what are the investments that you should be making, what are the associated trade-offs in order to allow you to better cope with these impacts. However, it's also important to highlight that insurance is just one of a multiplicity of tools that governments, individuals, communities, businesses, etc. should be exploring when thinking about dealing with the impacts of these disasters. And these different tools and instruments have to be coupled and combined together in order to develop an overall strategy, at least at the sovereign level when you work with governments. And this obviously brings you to difficult questions around trade-offs, difficult questions around the costs associated with some of these tools, but also with the view to, you have to make these investments if we are going to be serious about adapting to a changing climate. So I hope that gives you a steer in terms of the urgent need for us to focus on adaptation, and also the ways in which the insurance is relevant when we think about adaptation in terms of physical and also financial resilience. As I mentioned earlier, I would like to spend a little bit of time delving perhaps a little bit deeper into a few recommendations that I believe could be relevant as a community for us to think about the ways in which the industry can work with the public sector to address some of the adaptation challenges that we see on the horizon, or are very much material actually today for many communities and countries. And so the recommendations that I have, and I'll go into each of this a little bit more depth, is first and foremost, in order for insurance to really play a meaningful role within these communities and in the adaptation context, we need to invest in open source models that are able to provide a long-term view of climate risk and to link these with insurance solutions. The second recommendation that I'll focus on is the need for joined-up policy making, which puts climate risk models at the heart of national adaptation strategies. The third recommendation is really about developing a consistent climate adaptation regulation or developing consistent climate adaptation regulation and standards across countries. And I'll elaborate a little bit more on what I mean by this specifically. The fourth, which I think and I hope will resonate with many of you in the room, is really about fostering insurance innovations that can respond to a changing climate risk landscape. And the fifth is about strengthening dialogue between insurers and policymakers around Build Back Better. And this is really critical, again, to the point that I made earlier, that this is not only about transferring risk, it's also about how do you encourage and increase the investments that are also going into risk reduction, because that is also ultimately important when we think about the risk transfer element in the context of climate adaptation. The sixth point that I would like to elaborate on in terms of a recommendation is really a need for a deeper convergence between insurance in the context of humanitarian and development agendas. One might think that this is something that naturally happens, perhaps but in many instances, there is an opportunity to actually deepen the body of work and the convergence between these communities. And then the final recommendation, which I would like to go into a little bit of reflection on, is really about promoting and investing in risk literacy throughout society. And when I say risk literacy, I'm not only talking about climate, but just generally, when we reflect on the experiences of COVID-19 pandemic and how people understood risk, but also treated to risk, and also the kinds of investments, again, that were made in terms of making sure that we are resilient to these kinds of shocks. The first recommendation is about the need to invest in open source models that provide a long-term view of climate risk, but also models that are linked to insurance solutions. So improved risk data and analysis of the impacts of climate change are essential to increase understanding about the risk profiles of different countries, regions, assets, and populations. This risk data should enable modeling of the frequency and severity of different climate events, geographic exposure, vulnerability, and potential financial losses. The data should then be modeled according to different projections of the rate of climate adaptation. In other words, by different estimates of how much the vulnerability of the natural and built environment may have reduced over various periods of time. This will ensure that climate risk data covering both the near-term and long-term view of climate adaptation can be linked to insurance and risk transfer processes. Such models should also not be proprietary in nature, but rather should be open and widely available. This will ensure that they can be used to support both public and private insurance mechanisms, including the piloting of insurance innovations, without the pressure to recoup costs from commercial transactions. Hence, we need investments in analytics and in academic research institutions in order to service the collaborative design of climate risk models. Such risk models needs to crowd in the best of science, drive innovation, and raise standard of understanding of climate risk at all levels of society. We should thereby leave a legacy of open data and information that supports broader climate risk management for governments, firms, and people, that will also enable innovation and cost-effective insurance solutions for today and also in light of future climate adaptation. The second recommendation that I also highlighted was the need for joined up policy making, which puts climate risk models at the heart of national adaptation strategies. Risk data and modeling helps to inform policymakers on hazards, exposures, and vulnerabilities within their respective countries. They should inform prevention, risk reduction, preparedness, and considerations around risk transfer solutions. A national climate adaptation strategy informed by risk modeling should integrate all of these aspects of resilience, linking, for example, the financial mechanism with risk reduction efforts. It should also relate adaptation to development initiatives. For example, linking disaster risk financing and insurance instruments to the nationally determined contributions and national adaptation plans. And this will also be important in helping to identify best ways to capture resilience dividends. For this to happen, however, we need to have joined up policy making between different ministries that exist within a government. For example, between the Treasury Department, a Ministry of Environment, and disaster management divisions within governments. These divisions must also work collaboratively with development agencies to put climate risk data at the heart of national adaptation strategies. Such joined up policy making will be essential in terms of driving innovation in which development banks can promote development and application of risk information, risk reduction, and preparedness measures, thereby enabling insurers to price these risks and supplement the financing of post-disaster recovery and reconstruction with their capital. The third recommendation is on developing consistent climate adaptation, regulation, and standards across countries. In order to implement effective national and cross-border use of risk financing and insurance instruments for climate adaptation, common standards and a consistent regulatory framework are needed. This will require supranational actors such as the International Monetary Fund to establish standards that anchor climate and disaster risk finance and insurance into macro-fiscal considerations. An international standard for risk finance in macro-fiscal frameworks would be an effective way to trigger action at government level. Governments need to take a proactive approach to climate change-driven risk in their budgetary and fiscal cycles. The inclusion of national climate risk management measures that comply with agreed supranational reporting standards could be a way to help foster this proactive approach. In addition, a systematic supranational approach to the regulation of insurance markets, to which individual countries adhere, will be necessary. Appropriate regulation ensures that climate-related insurance is safe for the consumer in terms of ensuring that appropriate conduct by insurers and that they will be able to pay claims and would all file for insolvency after a large disaster. Consistency across countries is important, as sound climate risk insurance typically requires an appropriate balance between retaining risks in country and also transferring to globally diversified international markets. The fourth theme that I would like, or recommendation that I would like to elaborate on, is really about fostering insurance innovations that can respond to a changing climate risk landscape. Insurance innovations need to incorporate a dynamic, long-term, and adaptive view of risk modeling and pricing. Digitization, including big data and machine learning algorithms, have the potential to substantially increase the impact of risk finance and insurance on resilience. Applications should include the improvement of risk analytics and modeling, more accurate forecasting capabilities to promote early action, development of more sophisticated triggers for more effective and reliable parametric coverage, and speeding up claim settlements and payouts. Development agencies, intergovernmental organizations, and donors can support the development of these innovations for the benefit of adaptation. In addition, in order to overcome challenges around affordability and access, it will be necessary to create risk-sharing partnerships and incentives to attract private sector investment in countries in need. The next recommendation that I identified was the need to strengthen dialogue between insurers and policymakers around Build Back Better. The construction of new public and private assets should consider long-term needs in climate risks and lower greenhouse gas emissions related to the construction and operation of these assets. Climate adaptation policy should therefore drive new building codes that are focused on improved resilience and sustainability criteria, and which are mandatory for reconstruction efforts after disasters. Insurance innovation should then focus on incorporating this Build Back Better approach into the pricing of indemnity products, potentially going beyond the value of the damaged assets. Convergence around humanitarian and development agendas was also another area of recommendation which I had identified. Development and humanitarian efforts must be connected effectively to financial systems, integrating all lines of defense around risk management cycle. Public-private partnerships are needed to ensure that the risk capital and expertise of the insurance industry are made available in products designed appropriately and channeled towards the poorest, the most vulnerable, and the most marginalized within our communities. Collaboration and stakeholder engagement will be essential. Insurance needs to further research and possibly rediscover the needs of these parts of the population, while governments and development organizations must also promote business opportunities for insurance organizations, for insurance companies to invest in bottom of the pyramid markets. In addition, subsidization of insurance for the most vulnerable must be considered in order to include them in the greater socioeconomic stability that insurance can provide. The final recommendation, which I also think is quite an important one when we think about adaptation and the need to really consider the ways in which the insurance industry can support resilience building efforts, is really about promoting and investing in risk literacy throughout society. Investment to build capacity in risk literacy is not simply about making people in all parts of society better able to use insurance mechanisms and tools. Rather, we emphasize that risk literacy and therefore insurance support is about the provision of essential information for decision making, mechanisms through which public policy processes, policymakers, and insurers can objectively engage around considerations of risk, and also prudent and effective decision by policymakers and the establishment of necessary systems and rules to manage risk actively in the short, medium, and long term. By investing in widespread risk literacy, we make possible the range of other recommendations made above. And so I hope that these 7 recommendations which I have shared give you some insight into the opportunities and the areas where the insurance industry working with the public sector can actually make a meaningful contribution when we think about climate change and the urgent need for adaptation. As we head towards COP27 in Egypt in November, there's going to be a heightened need and discussion around adaptation and the need to mobilize resources given the impacts that are being felt by many of the most vulnerable amongst us, both in developed but also in developing countries. And so I hope that some of these recommendations provide some food for thought, but also reflection on the ways in which we can construct effective public-private partnerships, particularly with the insurance industry, to drive the kind of progress that we need. So again, thank you to the Convention A 2022 committee for the invitation to be part of this dialogue, and I hope that the interventions that I've made and also the recommendations tabled can be considered as you proceed with your deliberations through the course of the conference. Thank you.